Soldiers, wake up. What we are witnessing today is not just a dip, it is a massacre. The market has just wiped out over $1.4 billion in a single day. Bitcoin has crashed to the $67,000 region, breaking structures we thought were safe. Panic is at an all-time high. But in the war room, we don't panic. We dissect the corpse. Today, we look at the 4 pieces of data that explain exactly why this happened and where the absolute floor is. Before we analyze the damage, a mandatory warning: this is not financial advice. We are catching knives today. The volatility is extreme. Do not trade with money you cannot afford to lose. Risk management is your only survival tool. Now, let's look at the liquidation heat map. First, look at the scale of the destruction. According to the liquidation data, we saw $1.43 billion liquidated in 24 hours. Bitcoin alone accounts for $721 million of that loss. And look at the breakdown on the right. $1.22 billion were long positions. This was a targeted assassination of the bulls. The market maker flushed out every single over-leveraged trader who tried to buy the dip too early. Now, why is the price struggling to bounce? The answer is in the Coinalyze data. Bitcoin is trading at $67,241, down significantly, but look at the green line at the bottom, the long/short ratio. It is sitting at 69.2% long. This is the problem. Even after this crash, nearly 70% of the crowd is still long. The market is too heavy. Until this ratio drops, until these retail traders capitulate, the market makers have no incentive to reverse the price. They want to trap you. However, there is a glimmer of hope in the sentiment data. Look at the funding rates. For the first time in a while, they have flipped negative. Bitcoin is at -0.0038% and Ethereum is at -0.0162%. This means traders are now panic shorting the bottom. When the crowd pays to be short, it often sets up a short squeeze. We need this fear to increase to fuel a bounce. Finally, and most importantly, the weekly chart. Soldiers, this is the most critical chart of the year. Price has crashed -12.93% this week, but look where we stopped. We are touching the purple line, the EMA 200. This is sitting right around $68,000. This is the line in the sand. Historically, the EMA 200 on the weekly time frame is the ultimate bull market support. We are also sitting in the yellow demand zone, $67,000 region. If we lose this purple line and close the week below it, the bull trend is in grave danger. The bulls must defend this level. Let's summarize the intelligence report. Liquidations. We just witnessed a $1.4 billion flush. The leverage is wiped out. Sentiment. Funding rates are negative, meaning panic selling is here. The trap. However, the long ratio is still high at 69%, which is a concern. The level. We are testing the weekly EMA 200. This is the do or die support. My strategy? Watch the weekly close. If the EMA 200 holds, we survive. If it breaks, we prepare for winter. Once again, this is not financial advice. The market is ruthless. Protect your capital so you can fight another day. If you want to navigate this storm with data, not emotion, smash that subscribe button and join the war room. We stand together. War room dismissed.